Why are we actually in a bull run? Why is Bitcoin creeping up and up and up? I believe most people think that's because of the Bitcoin ETF demand, right? BlackRock buying up all the Bitcoin. That's what's causing the price rally. But is that true? I believe it was the anticipation of BlackRock purchases that actually drove the price. It wasn't necessarily just BlackRock itself. It was speculation on ETF purchases that pushed the price to new all-time highs. But that then begs the question, what happens if Bitcoin ETF demand goes down? Unfortunately, that's not a theoretical question. Have a look at the net flows in and out of Bitcoin ETFs. This chart starts on the 10th of January, and of course most of the days we had inflows. But look at this, since the 19th of March, we mainly see outflows. Looking at the past 14 days, if you take those past 14 days as the typical behavior in ETF purchases, then that demand annualized is 1.87% of the entire Bitcoin supply. Yes, that's more Bitcoin than is currently been mined, and the mining will even get cut in half in a few weeks, but it's nowhere near close to the expectation. That number used to be at 9%. Was this already the cycle peak? Nobody expects it, but very often things happen that nobody expects. Let's have a look at some on-chain data. Let's have a look at some models that try to predict cycle tops. For example, we've got the logarithmic regression here, interestingly enough, color-coded in a rainbow. This is the Bitcoin rainbow chart. It didn't do too well in the prior peak. That model estimated that we'd be peaking out at 136K. Now we are not even at the middle of that chart. The peak would be at 522K. But it is somewhat useful to estimate the bottom. Currently, that bottom, in case we go negative, could be around 32,000, right? But we even went temporarily below that. Here's the Pi cycle top indicator. This tends to cross whenever we are very high in Bitcoin and tend to be at a bear market. This is not yet negative. We are not yet crossing between those two moving averages. Here's the market value to realized value Z-score. Also not yet in the red, looks relatively fine. But here's the problem, not everything looks fine. Check out the value days destroyed multiple. This shows what long-term holders, long-term whales are doing. When they are moving their Bitcoin, then this is spiking up. This tends to happen when Bitcoin's upside isn't that huge anymore, and we've just peaked here again. Have a look at this. This is the supply adjusted coin days destroyed. So not value days destroyed, but coin days destroyed. Also peaking up, also a potential sign for a reversal at some point. It's not perfect, right? Last time this peaked out, the Bitcoin price was at 36K, and of course we went up all the way to 68K. Now we are peaking again, and yes, we could rally further, but it's definitely not as nice anymore compared to when Bitcoin was just at 16K. Here's the realized hodl ratio. The peaks tend to be lower each time. Now we are again quite high, indicating that short-term traders are a bit more active now than the long-term traders. There are so many models, and no model is perfect, but when we combine them all together, we might get somewhat of a differentiated picture, right? We can look what are the short-term investors doing, we can look at what are the long-term investors doing, how much activity, how much attention is there currently on crypto, and whenever this is high, then the price tends to be somewhat elevated. The picture now is somewhat mixed, right? We are not necessarily dirt cheap anymore. Here we can see the realized profit based on the cohort. So short-term holders are in red, long-term holders are in blue, and again, both combined create interesting peaks. Here are the market value to realized value bands. Whenever this is high, we can go down. We don't have to, right? But we went down after the recovery from 3.5K. 11K was the top here. Then we saw the Corona crash. Then we went down in the secondary top in 2021. Now we are again relatively high. We could go higher. We have seen this before. There's no perfect model, but at least we are not cheap. And here's the thing a lot of people are still speculating on. This is the price performance since the cycle all-time high. Some people look at the halving, some people look at the cycle all-time high, some people look at the cycle bottoms. It doesn't really matter. It shows us simply that there's more room to grow. Nobody has a crystal ball. We're simply just looking at data. We interpret this data differently. What I believe is the most important thing in all of this is to simply have a balanced portfolio. Don't have all your money in crypto, right? Have some stocks as well, have some cash as well. Don't be the one that gets wrecked and didn't take profit. Most people forget to take profits. So if it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. There's also a free Telegram. Link is down below.